Hello everyone, welcome to our price action webinar. So it's been a while since I've presented the webinar for you. So yeah, today we're gonna go through a price action. Basically, price action, the art of price action. Trading, it's Andrea for anyone that is new here. So I'm gonna go through what it is, how you can use it, and if we have time, I'm gonna go through some strategies as well. I would like to quickly upload in the handout section the PDF version of this webinar. So allow me just a few seconds to upload the slideshow. In the meantime, please have in mind that in the webinars@edgefm.com it's our email address. I'm replying to those emails, support team as well, initially support team, and if there is something that it needs my involvement, I reply personally to any request, question that you might have in general for the markets, for a webinar, for a strategy, and so on and so forth. So let me just quickly. Come on. Yeah, okay. Handout is ready. Feel free to download it. Okay, it's on the handout section. You can see it in the go to webinar toolbar, handout section, and over there you can find and download in a PDF format the slides of today's webinar. So let's move on. I need to go through the admin as usual. This is myself. Some of you may know me for many years, so I'm not going to spend time introducing myself. Anything I've missed, the risk warning. Sorry for that. Yep. I need to go through as usual to the disclaimer warning. In the meantime, I would like any one of you guys to give me feedback in regards to the audio and whether you can see the screen and so on and so forth, just to make sure that you can hear me loud and clear. You can see my screen, okay? Screen and audio on point. Happy Tuesday, Andrea. Happy Tuesday to you, Nicole. Thank you for the feedback. So, ready to go through the admin. This material provides general marketing communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing an investment advice or should be as investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty and that any investment of its nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Trading leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risk involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. So, okay. The risk disclosure and any legal documentation, as I keep saying, it's on the website. If you cannot find it, let us know. We have a live chat 24/5. if I'm not mistaken, it might be 24/7 the live chat, but it's there. Our agents are there to reply. So feel free to ask for any help that you might need. So we are good to go, guys. Welcome, Martin. Welcome. Okay. Let's skip that. Okay, what we're gonna cover today. So we're gonna see a different aspect, different angle of trading. The beauty basically of the price action. The beauty of reading what the candles, what the price action is telling us. It's not something easy, but there is a beauty on that. Trust me. Why I'm saying that? Because it's sometimes it's so obvious by just reading the candles without necessarily the need of any indicators. However, I would like to clarify, you cannot hear me. Let me check the audio, it's capturing just fine. So let me reply to Darku. Please check your side. Everything looks fine from our side. So there is a beauty on reading the candles, on reading the chart as such without any indicators. However, guys, I would like to clarify something. There are people that they can see this beauty and they can easily identify it, and they can read the candles. There are people that they don't feel confident enough to just rely on the price action. There are people that they cannot read easily the price action and the candles, and that's absolutely fine. You might, like people, if we separate how the human brain works, there are people that are more of a numerical thinking, there are people that they have a more theoretical thinking, there are people that they are like they are visual, they can understand only by seeing visuals. So it's how our brain works. That is the deviation between us. So if you're not really a price action trader, if you are not a person that can easily understand or make conclusions just by reading the candles and the price action, that's absolutely fine. Okay, that's absolutely fine. If you're not that person, you're not that person. You might be a person that prefers you might be a, I don't know, you want always the assistance of a particular favorite of your favorite indicators. You might be a person that um, relies on the volume. You might be a person, so it's just fine. This is what I'm trying to say. I'm obliged to present a price action webinar, but if you're not that kind of person, you're not that kind of trader, that's absolutely fine. So today, as I said, I'm gonna focus and see what a price action trading is, how you can take decisions made on price alone, how you can spot support, resistance levels, reversal levels, pin bars using price action strategy, and how this kind of levels, support, resistance, reversal, and pin bars could be key to a price action trading, and how you can make use of them. How can you identify them and make use of them? Or even find out entries and exit levels based on the on a price action analysis. So let's move on. Obviously, interrupt me whenever you want. Let me know if you don't understand something. I will be here to help. Okay. Okay, we're good to go. So, first of all, what a price action is. How many of you are a price action traders, guys? Do we have any price action traders? Actually, now that I'm thinking of it, we shouldn't have price action traders because price action traders might not need this webinar. Yes, beginning to enjoy it. Nice, Nicole. Yeah, there is a beauty on it, but it's just whether you are that kind of a person or not. So it needs a bit of a testing, and it's in order to realize whether yes, yeah, that makes sense to me. Yes, it's working for me, or no, it doesn't. So yeah, I want to see if I can add it. Nice, perfect. Okay, hopefully we will manage to catch up with some strategies as well for you, and Sania, because I see that you are already a price action trader, but you need something on top of that. So hopefully we could see some strategies as well. So price action is simply another term, as just for newbies over here. Price action is simply another term for the movement of an asset. So price action trading is basically a strategy that is neither technical analysis, nor a fundamental analysis, but purely with the price move rather than any fundamental or technical analysis. So the people that we consider to be price action traders, what they actually do is observing the recent price movement, and they use the price movement as their indicator. So they place any trades based on their individual decision making based on the price movement. Okay? There are many short-term traders relying exclusively on price action to make trading decision. And why is that? Why short-term traders? Pretty much because if you are a very short time frame trader, so a minute, 5 minutes, 15 minutes, the indicators delay to provide. Sometimes they delay to provide you a signal if you are a trader in such a short time frame. So there is the majority of the short-term traders rely solely on the price action to take a trade instead of using an indicator. They might use an indicator, but just to confirm their decision. But usually, if it's a very tight time frame, such as a minute or 5 minutes, an indicator delays a bit the signal. You know that in general, what is a technical analysis? Technical analysis is a derivative, or technical indicators, technical analysis is a derivative of price action, right? You know, any indicator is using past prices, use calculation on the past prices, and giving us an outcome that we use to take a trading decision. So what is better than the actual price action instead of an indicator, right? So price action can be seen and interpreted as another technical tool simply by just observing your price over time. The only thing that you need to be aware of is support and resistance levels, and the close observation and a careful observation of your candlesticks, their body, their tail, the length of their body, the length of their tails, and so on and so forth. Okay, that's your indicator. Your indicator is trying to observe as close as you can your candlestick and interpret their behavior. That's why in a price action, it's preferable to use a candlestick chart or a pin bar, but candlestick bar is widely known and way too easy to read than any other types of charts. So preferably we use candlestick charts. They help with visualizing better the price movement, simply because they display open, high, low, and close values in the context of an up day or a down day. With this way, by having candlesticks, we can also spot candlestick patterns. I don't know how many of you have spotted patterns, using patterns, so you are aware of patterns, but I'm referring to equilibrium patterns, rounding top, rounding bottom, harami, triangles, wedges, pennants, flags, uh, evening star, morning star, head and shoulders. There are so many patterns, so many patterns. So yeah, in the price action, you tend to identify there is one a pattern, and that if you identify a pattern, your life it's even easier because by spotting a pattern, you can immediately you have actually possible entry and exit points. Okay, so let's move on. Okay, pretty much covered all this. The only thing that I'm gonna add to it is that price action is something that is very common, is widely used, not only for retail traders, but institutional traders as well. Obviously, it's becoming less popular with the use of high frequency trading, algorithmic, and etc. But yes, it's very well known, widely used, and not only by retailers such as yourselves, also institutional players. Yeah, harmonic price patterns as well. All the patterns by just if you see a naked, if you allow me, a naked, this is not naked chart, right? A naked chart make which is price actions makes it easier for the observer to spot patterns, harmonic ones or not. I mean, all kind of patterns. So, for example, over here, what was that? A cat, but I just noticed that it was in a not the brilliant one. Let me just. Okay, it was in this. Wait, no, that's not good. You see, it was in a triangle which was broken temporarily. So the break of that level could have triggered some limited short positions, while the return back could have triggered a long position with entry within the triangle and a target on the extension of the upper trend line. So you see, yeah, all kind of patterns. So let's get back. As I said, widely used by institutional players as well. Many pattern, uh, many actually day traders might consider placing a very large trade, often with the use of leverage, obviously, using price action as their only guide with the goal of generating a profit, from very small underlying movement. Okay, so in this case, technical analysis and fundamental analysis aren't especially useful in these cases, given that, I mean, the very short-term nature of the price movement. Sorry, so because yeah, so in a very short-term time frame, the price action might be a more reliable indicator rather than fundamental analysis, because it clearly gives you immediate clues into supply and demand balances. Okay, very helpful uh, clues about the supply and demand balances. So yeah, it is what it is. So here we have some very brief primary examples of price action trading, and I'm referring to swing lows and swing highs, swing lows, swing highs. So a swing high and or a swing low, actually, it's quite helpful for price action, because that swing low or that swing high, it's a support and resistance level based on a price action analysis. Okay, swings could be considered as immediate support and resistance levels, or breakouts. Actually, they could be used as immediate support and resistance levels, and in the near future, the breakout of such levels or a consolidation at that levels, it gives us the perfect example of price action trading. For instance, if let's assume Mark is a short-term trader, a 5-minute one, okay, doesn't really matters, but yeah, a 5-minute one. But let me get back. So he's watching the price, and he spotted this swing low, and then it went up and did another swing high. Okay, swing low and swing high. So without a lot of thinking, on spot, he has an immediate support and immediate resistance levels. He could put some lines on, and it can wait until he sees the price breaking one of the two levels. And on the breakout, either with the use of pending order or just observing and just on the breakout enter the market. Okay, this has been immediately turned from a swing high and swing low into support and resistance levels, and eventually into a trigger point, into an entry level. Okay, or in general, there is a short-term trader again, may watching the price, and he watched a breakout of a previous price. He has observed that there is a breakout at a particular level that it was retested several times. So that, as such, occurred on high. If it was occurred on high volume before, that level it occurred on a high volume before, it could be considered as the perfect timing to take a long position. So well, anyway, we're gonna see more later on. So just for being clear, remember, a trade occurs when two parties, so the buyers and the sellers, take two different views, right, on the same asset. So it's all about supply and demand balance. So in theory, the buyer and seller should have access to all the same information about the security, the same data, the same indicators, the same fundamental analysis recommendations, okay? But regardless of that, we are seeing two different approaches to different opposing conclusions by market participants that they have actually on the same information. So why they're taking a different position? Why does this happening? Simply because each trader has his own judgment, okay? His own judgment, which leads to different opposite views, okay? So the reason why I'm saying that is in order to make you understand that um, you shouldn't listen or blindly follow any recommendation that you might see in a forum and etc. And even if you do that, if you check forums or signal services, etc., or signal given by friends, by others in general, you should be able to filter it out. Because if it's something that um, it's visible to the other person but not to you, you shouldn't follow his approach, because his decision was based on a very different point of view. For example, okay, for example, we have, I don't know, okay, this is not price action, but I'm just want to make you understand the price action trading concept. Okay, that's why I put this example on. Let's assume that we have this euro pound over here, 1 hour chart. The person that uses this setup is using a 15 moving averages cross and a 20 moving average indicator, and you can see that they cross each other. Okay, so this movement, if the 15 cross above 20, like here, this can be interpreted as a buying signal for some, but as a sell signal for others, because buyers may base their decision on the standard recommendation of moving average crossovers, while the sellers may take a contrarian view that the standard recommendation to buy on crossover will lead to an overbought situation, and hence they might consider selling it. Okay, so same setup, two different views. Okay, but the reason why I put that on is because I want you to remember that regardless if your decision comes opposite what you're seeing in some forums, or you're seeing some I don't know, website with the recommendations with signals, if you are seeing a buying signal, go for it. If you're seeing a selling signal, go for it. Okay, with a price action or with a technical analysis approach, regardless of what you're using, if you you had a different point of view and different judgment, just follow your approach. We have seen this. Yes, let's move on. Okay, let's slowly start. I mentioned that price action is basically the beauty of be able to use a naked chart, no indicators at all, just trying to read the price movement, just trying to spot support, resistance levels, breakouts, consolidations, based solely on the behavior of your price. And here I put an example on how to spot trades. Okay. Basically, first of all, I mentioned before the swing low and swing high. The very first or one of the ways to spot, to observe your price action is by monitor whether there is any swing low, any swing high, repeated retest of the particular level, or retest, yes, retesting a specific level many times, or these kind of behaviors from the price is it provides us support and resistance levels. And such an example is this repeated ceiling over here, which actually took many weeks. Repeated ceiling. So the asset is tested again and again and again and again and again and again for I don't know how many weeks. I mean, it looks like a whole year. The 2100s territory. So that's a very strong resistance levels. Why? Because consider these candles are weekly candles of S&P 500. So if I start counting, that should be, I don't know, more than a year. You keep retesting and retesting, but never manage to extend above it. The same area again and again. I think it's quite clear. So that is considered to be a key resistance level. So this is one way to spot a support and resistance level. I'm not saying that it's only for weekly chart. This rely to any time frame, any time frame, and more precisely, as I said earlier, price action traders are usually short-term traders, a minute, 5 minutes, because it's as straightforward. They just check whether there is a repetition of a failure of a particular level, if there is any swing low, swing high, breakout of a previous price, and they use these as they are entry levels, they are stop losses, they are trigger points, they are immediate support and resistance levels. Without any indicator, oscillator, and etc. Swing lows and swing highs also use as support and resistance levels. So these swing lows have revealed a support level, right? Sorry, I don't feel very good today. That's why I'm pausing a bit, okay? I'm sorry for that. So, yeah. So it's, you can either use swing lows as your support, swing highs as your resistance, repeated ceiling as your resistance, repeated floors as your support, connecting the lows with a trend line and use that as your immediate support. Connect the highs with a trend line and use that as your resistance. What else? Yeah, pretty much this. I'm not sure whether but I would like to raise your attention also to the possibility of consolidation. Because here is what we have over here is a consolidation. And why is that? Because we have a repeated ceiling and a repeated floor with the asset just going up and down within the same area. So this is consolidation. This is indecision between support and resistance level, and indecision more precisely on support and resistance level. Why I'm saying that? Because you can see that it's moving sideways within the range, failing to extend above support and failing to extend above resistance. Why it fails to extend above support or extend below resistance? Because at the time that the sellers extend the price lower at that level, okay? There is not enough momentum, there is not strength, there is not there is an indecision on whether the asset should extend further below that level. So at the support and because we can see repeated support and resistance levels, this implies to indecision on the support and resistance levels that we have identified due to these swing highs, swing lows, or this repeated ceiling. Okay? So indecision on support and resistance level is something that should turn your attention either to the possibility of trading this ranging market. So at every swing low and a rebound, you can go long with target at the resistance area, or at any swing high, you can go short with target the floor, or you can say, okay, I won't be involved, I will stay, I will keep monitor, and as soon as I see a nice, decisive, strong breakout of either my support or either my resistance level, I will decide, I will consider whether I will enter or not the market. Okay, so okay, it's not like you need to take action. That's solely up to you, your judgment, your decision, your approach, and etc. You can either decide to trade the range in the market, okay, or to wait for a trigger point. And a trigger point in this case, it was initially this very first breakout that we had seen after nearly a whole year, or even more than a year. It's a shame that I cropped it, but consider this a weekly chart. Yes, this might be more than a year. This very first breakout outside and above the resistance, more than a year's resistance, and outside may breakout. So that was the very first trigger point that you might consider entering a long position at that level, okay, or waiting for confirmation. That obviously took many weeks, but confirmation came as soon as we saw the asset not only holding outside the range, but eventually broken this latest swing high that formed above the year's ranging market. So even if you missed that level or you weren't sure whether you want to enter so immaturely, so early, you needed another confirmation of your decision. The confirmation came, I don't know, 1, 2, 3, 4 months later, but it was a decisive one. Okay, obviously, understand that, Andrea, this is a weekly chart, it takes many months. Yeah, it was just an example. Okay, it's just an example. You might see the same, exactly the same behavior in 1 hour or in 15 minutes or in 1 minute chart. It doesn't matter. I just want you to understand that with price action, a ranging market, a consolidation, a sideways movement is tradable. But if you don't want to do that, still a breakout is tradable, right? If you miss the very first breakout, still with the very next signal, you can still trade you can still enter the market. I want you to understand the back, the basics of it, not whether my example is in a weekly chart or not. We might have seen the same behavior in a 1 minute chart. It doesn't matter. Thank you for that, Nicole. I don't know what's going on. I think something that I ate, I feel. So yeah, let's move on. So, yeah. So I don't want just today to present you how to read the markets, to read the price action. I want you also to be able to actually make you understand that you need to question yourself for anything, not price action analysis only. Um, because okay, you're seeing, you're observing, you came out with some conclusions. It's key though to question yourself every single time who is in control of the price. Question yourself, okay, we have that breakdown. So, who is in control of the market? Are they the bulls or are they the bears? Um, for every single candlestick, first candle, second candle, check the length of it, check the tails, and question yourself, okay, considering the length of the body of the candle and the length of the tail in the candle, who is in control? Are the bulls or are the bears? Question yourself. That will give you an answer and will give you trust on your final decision. Every move reacts as a presetting trend for the next move. So at every single candle, ask yourself who is in control of the price. Okay? Here, there was no tail lower, so obviously here, bulls were in control because it was a nice decisive candle with a tail at the upside, okay? No tail lower, so it seems that the sellers lost the control, so buyers were in the control. Here again, buyers were in the control. But the next consecutive 4 candles were doji, suggesting that there is a huge fight between them that keeps the price sideways. So the supply and demand balance was nearly equal. The sellers and the buyers were nearly equal. So by seeing these consecutive sideways doji candles, we knew that okay, there is an equal supply and demand balance. There are nearly equal bulls and bears in the market, so I need to wait to have a clear view. Yeah, nice, Nicole. Nice. Nicole is saying I would like to share her comments. Nice example. I get it. I get that it offers 2 opportunities, and given weekly time frame, will be great to capture the range on a daily or even 4-hour chart. Well done, Nicole. Well done. Actually, I didn't thought about it. But yes, you're right, because on this indecision on the weekly chart, on this failure, or for example, on this swing down amid this huge weekly candle on the resistance level, that could have been tradable easily the next Monday morning on your daily or 4-hour chart. Well done. Yes. So Nicole is saying that it gives you 2 opportunities given the weekly time frame to have a view and capture the range in market, the range as such on the daily or even 4-hour chart, and consider some 4-hour or daily positioning. Okay, and and yeah, I like it. Impatience in the past didn't allow me to capture it. Well done. Okay, patience is the number one in the risk management for risk management, and especially in financial markets, because if we get impatient, we tend to do mistakes. Yeah, that's a good practice, Nicole is saying, to ask the question of who is in control. Thanks, I know this, but the contest impressed the value of stabilizing myself and being decisive one way or another. Oh my God, Nicole, I couldn't say it better than what you just did. You're absolutely right, and hopefully people over here saw your comments and they considered your comments, because I know, guys, because we have to do with real money, right? We have to do with our money. with our savings, with money that sometimes we just we sit with a lot of sacrifice, and we just want to to, to have returns back, and to do profit that might help us with any other goals in our lives, so that we need substantial revenue to achieve what we want. So that's why, because it has to do with our own money, with savings, it's very emotionally related. That's why it's very key to have to have how can I say that? For example, obviously, you all every single one of you should have his watch list. I don't know whether you have seen in the past my webinars about having a trading journal. So that's key, because it keeps you consistent with your strategy and control. It gives you some guidelines. It gives you limited. Next to your watch list, you should put some um, phrases, questions, such as, such as, always, such what we said earlier. Always ask yourself, who is in control of the candle? Who is in control of the price at every single candle? Question yourself. Write that question down, and you need to keep monitoring it. Second, you could it helps me a lot having some phrases such as sell down to the sleeping trade, or having down um, uh, my risk and reward ratio, in order not to get greedy and change that. Or I always have next to my trading journal also my goal of the day, of the week, and the month, because in order not to get very aggressive and to exit and to exceed, to add to my existing positions just because of my greediness, and to get out of my goals. These are things that you should write down and have it always next to you, because they will give you control. Okay, so let's move on. Further examples. Is an example that again our candle, our price action was in a range, broken it. Okay, but the exact following candle, okay, it was an indecisive one, a dodgy one, that clearly stated that we cannot reply to who is in control. We cannot reply whether it's buyers or sellers, because there was a lot of indecision. There was a lot of pressure for both sides. So patiently waiting for the following candles to make clear to ourselves whether bulls or bears are in control. And again, the next candle was a bearish candle, but the tails, the up tail and the lower tail were huge. Something that also shows indecision, something that also shows that there is not, neither the buyers, neither the sellers are in control yet. The very next one was a bullish one, but with a huge tail down. Again, not a clear reply whether bulls or bears are in control. Okay, but the breakout of these 1, 2, 3, 4 consecutive sideways movements. So the very next candle, which was decisive, strong, nearly full body one, replied to the question that bulls are in control. And you might say to me, but Andrea, was a bit late. No, it wasn't. No, it wasn't. It still, there is some distance until they posted their swing high. So why not benefit even with that the distance from the entry point? Why not? Uh, Timely webinar. Yes, you're right. I know I focus a bit on the on the control, on the risk management rather than the actual price action. I'm really sorry for that. You indeed you're right about that. It's a timely webinar. Isn't an equilibrium bullish pattern before the big egg? That's nice, nice, Nicole. And you're absolutely right. Yes, this is indeed an equilibrium bullish pattern. So adding to the argument that yes, we are good to go, we are good to enter long. You're absolutely right. So it's a combination. So identifying that indeed that was a equilibrium bullish pattern before the big full bullish candle, before that one, that was an equilibrium pattern. You are absolutely right, and that could have led to an early long position with people spotting the equilibrium pattern, able to enter earlier and benefit more. But even in the case that you miss that, because it's not always obvious, the pattern is not always obvious to every one of us. Regardless of that, right, even if you haven't saw and identified the equilibrium bullish pattern, you could have still entered enter long either at the end of this candle or at the swing low over here with benefit this distance over here. Okay, even if you missed all that, we have over here another pattern, a bearish one, up, doji doji, indecision on the resistance, which is pretty calling for taking a contrarian view to the downside, and or either setting a pending order as soon as the asset moves below this latest swing, this support level. Okay, this tail over here could act as your entry point in a pending position because we had a decision on the resistance level and actually pretty much a rounding bottom of, so you could on the indecision on these two candles and with that present an indecision on the resistance level, you could decide to go short anyway, or you could set a pending order as soon as the asset crossed below my latest low, which was this one. Okay, and it would have been easy busy because you had already a target level. Why you had a target level? Because the previous resistance now it can be used as target, okay, or having also multiple targets. Target number one, the immediate the support, the resistance that is now turned to support, and target number two, the previous support. Okay, by having multiple targets, you can, with a nice risk management, such as having dedicated the 70 or 80% of your position on the very first target and the rest of the 20 or 30% on the second target. With this way, you are locking profits as well. So let's move on. That's another example with many ignore the indicators. Actually, I will move on to the next one that doesn't have any indicators, and it actually it has also an ascending triangle, so combining the price action with candlestick patterns as well. Look at this beauty, a flat ceiling repeated again and again. So connect your highs. By connecting your highs, connecting your highs with the trend lines, gives you a better illustration of a potential pattern. I connected my highs, right? Flat, repeated ceiling, so it was easy to be spotted. And then I noticed higher highs. I didn't notice actually. It was an example that I took obviously from a website, but it's something that I did earlier with here, by connecting my highs, connecting my lows. I mean, it's not where I saw pennant. I saw pennant? When was that? I saw pennant was in oil. Yeah, we had a flag in oil back on the, it was a pennant, sorry, it was a pennant in August. So if I zoom out a bit, so by connecting back in August the highs and the lows, okay, I had a pennant. This is a pennant on the pre-existing long. Look, I zoom out. The 1, 2, nearly 3 months rally. That was a pennant, right? Or this looks the latest one. It looks like a Head and Shoulders swing one, swing two on the top, swing three. Looks like a Head and Shoulder with this as a neckline. So this kind of stuff, guys, helps you. The trend lines, basically the trend lines, because without the trend lines, I might even notice that that might be a Head and Shoulder formation, but it's definitely is a triangle with a flat bottom. So these things helps you identify patterns and also breakouts, reversal points, entry levels, and etc. So, for example, here, repeated ceiling, so adding a flat trend line connecting the highs, connecting the lows, so it gives me a triangle, an ascending triangle with a flat supply line. So what I have to do? Either consider moving contradictory of the price. So what I mean, every time that the asset fails to break the ceiling, such as here, it went up, doji, bullish, but after a swing higher, it tested the ceiling, failed, and then eventually down with a bearish, strong bearish with a big body bearish candle. So on that indication, I could say, okay, this is clearly a failure to extend higher, so I can go short with the floor at my trend line. So with a target, short position with target at the trend line. If over here the asset failed again, if just in case that it failed again to extend above the triangle, and if we had seen a bearish candle here, you could have still entered short with trend line over here, with the target over here at the extension of your trend lines. Don't be afraid to use trend lines. Using trend lines and trying to interpret the price action is key. It's very subjective as well, but it's very important. Okay, and it's okay if you come out with two different conclusions with your friend. That's fine, because you might want to decide to go in contrast where you to I don't know, to have a more short-term view and to trade within the triangle, or the other person might consider and trading on a breakout or in a higher time frame or in a very short time frame, so, or going against the trend and so on and so forth. So interpreting price action is very subjective. It's common for two traders to arrive at a different conclusion when analyzing the price action. That's fair enough, because one trader may see a bearish downtrend and the other one might believe that the price action shows a potential near-term turnaround. Okay, so that's okay. So over here, higher lows, equal highs, ascending triangle, eventually broke and closed above it, but it was a very indecisive candle, same length of the tails, and the body is in the middle of the tails, exactly on the mid. So it was a bit of an indecision. So we couldn't really take an early long position entry because it was a bit neutral. The very next one, it was bearish, but it was key that it closed above the top of the triangle. The very next one, again, remained outside the triangle. And then we had consecutive consecutive bullish candles indicating that yes, the momentum has changed, the trend has changed, and bulls are in control of the medium term outlook of that particular asset. So in this case, if you decide to go long, okay, you can use the base of the triangle, okay, the base of the triangle, okay, and to place it at the breakout level and use the same distance in order to figure out your target. So you measure the distance in the base of the triangle, you shift it at the top of the triangle where the breakout occurred, and over here with this, the same length could help you set your target level. Is that clear? Is that clear, guys? Is another way to identify easily targets. The stop loss, very nice question, Maden. The stop loss in this case could be the latest swing low of the asset, so that takes us down here, or you can use this initially and later on to drag and drop it below the latest swing low. So here now is our new swing low. So you can drag and drop it at the latest swing low. Or over here, you can use also. So there are three options. That will solely depend on your risk and reward ratio. Okay, one way, latest swing. Second, with the prospect of drag and drop it later on to the new swing low, or to be below the trend line, okay? And as I can see my candles over here, I will have placed it below the trend line and actually slightly below the latest low, which is this one. So somewhere here, okay? Feel free to use trailing stop losses. Using a trailing stop loss, using the average movement of the asset, so that something can be used by ATR with the ATR. But if not, yes, yeah, here, just slightly below, it's below the trend line and slightly below the latest low that we had. Okay. Yeah, so move on. Oops, there are many examples. We are already in an hour here. Let me check. Yeah, I have also merged. I have an extra webinar over here. So I will free the extra webinar for you to read at your free time. And I will try to cover just the next few examples, which are mainly examples, okay? Mainly examples, because there are a lot of possible entry points depending on your subjective decision. May have been biggest headache. Yes, stop losses are the biggest headaches with price action, but if you had followed your risk and reward ratio, okay, whatever that is, okay, you might use if you had followed your risk and reward ratio there, I think that shouldn't be so much of a headache. Or if you have followed a precise system on how you can use where you should place your stop loss. If it's too difficult for you, if you're struggling, use trailing stop losses. With this way, you are locking profits. Or use ATR and say, okay, I will use half of ATR or ATR as such to place my stop loss and twice the ATR for having my target. Or you can say I will use the latest swing low as my stop loss, fixed stop loss. So if you're struggling, there are many ways to set your stop loss. Trailing stop losses, stop losses using the value of ATR, or using the latest swing low, or using the previous low, or and so on, so the previous support level, the previous resistance level. But stick to it. So okay, they are grabbing it and move on. That means that your stop loss is way too tight because you're afraid you put it way too tight. It should be slightly above the previous low or the previous support resistance level, or use ATR. Why not? Or trailing stop. I keep repeating, trailing stop are very useful. So this is another example in which we have seen the asset entering a ranging market after rebounding from 11170 territory, enter a range market. So that immediately gave us two support levels. So the bottom of this long downtrend, another bottom of this repeated floor over here, so two support levels, and the edge of the range as our resistance. You can tell me, but Andre, why you didn't use this one and you use that one? Because that one retested several times. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 times. Okay, so that was a much stronger resistance level than this one. And indeed, it extended higher. Sorry. My colleague is just looking at me. I was a bit late for a meeting. So so the break of this resistance, okay, it gave me an early alert that the asset might have changed the ranging market, and now we might see a bullish market. So it was an early alert. Bullish, full body candle, bulls are in control. A more like neutral one, a bit of indecision. The following one was clear enough that bulls are in control. So we had 1, 2, 3 consecutive bullish candles. So over here on the third candle was clear that the asset is outside the ranging market, and we have a clear uptrend. So our what we should have question over here is whether first of all, I did question myself and I said, yes, 1, 2, 3 consecutive candles to the upside, with the first and the third clear bulls in control, because the tail on the bottom was small, the body was much higher, and there was further push to the upside. So that was a nice entry point, okay, with stop loss below the latest swing low, so below that candle, so that will be below my resistance as well, okay. Or if you thought that this is too tight, you could go here and put your stop loss over here, and target, what would be the target? What would be the target? There are many ways to do it. Either measure the range and put your target based on the same on the range over here, or check for past support and resistance levels. So the past resistance level was this one, so that was a nice target level for me. Previous support, and it was pretty close with the range of the range. So if I measure it, let me see, can I so if I measure these, yeah, it's very close to this distance. Yeah, so yeah, target level, that one. Indecision on the resistance area on my target level could lead to short-term contrarian view, short-term short position. You see why I'm saying indecision? Why I'm saying indecision? How can I control Z? No, cannot delete it. No, I want to delete it. I want to delete it. Yes. So hit the target if I taken the target, but I saw 1, 2 times been retested, a pullback, another boost retesting the ceiling or my target area, whatever, and then another pullback strongly down. So indecision with a equilibrium bearish pattern, actually with a bearish pattern, signaling for a correction, for a pullback, limited or not, who knows, but it was a pullback, and you could have benefited on a limited pullback, a short-term position with target your previous resistance. Easy busy. Easy busy. Indecision leads to positions, near-term position, limited positions against the trend, or yes, against the trend, yes. Indecision, exhaust, repenetration of level and opposing reversal signals. Well done, Nicole. Well done. Exhaustion, repenetration of level, and opposing reversal signal. Well done. Well done. You get the point. I'm very glad for it. More exhaustion examples. More exhaustion examples. Here. Whoop. Actually, we had an evening star formation over here as well. Here. Exhaustion moves at the support level, now turning to resistance level. Rebound at the support level, so up. Here, repeated floor, repeated ceiling, so immediate we had an immediate resistance and support level. Here it was largely broken. I shouldn't have asked a question to myself, who is in control. That's crystal clear. If you have seen how big this this bearish candle is, and that it broken 1, 2, 3, 4 swing lows, you shouldn't even question yourself who is in control. It was clear that it was sellers in control. We didn't even have to look for or wait for the following candles in this example. Boom. So, okay, Andrea, but what I'm gonna use as my target over here? I didn't have the previous support. Okay, if I zoom out, I would have been able to find previous support levels, but okay, even if you didn't knew in this short position where you should take your stop loss, your target, use Fibonacci's, use ATR, or don't use anything. Just set your stop loss above the resistance that we have over here, above the ceiling over here, above the swing that we have over here. Measure the distance from your entry point. So let's assume that, okay, let me clear everything again. So let's assume that you have seen this huge candle that broken these 4 swing lows. You decide to enter here, right? Come on, Andrea. Pen. You decide to enter here, okay? Entry. Stop loss was obviously here, above my latest swing highs and my resistance area. So measure this distance, drag and drop it here, and you will have your first target and your second target, because twice once of this distance is your first target, twice of this distance is your second target, and you can say, okay, I will put the 80% of my position, or 70 or 60% on the first target, and the remainder on the second target. Lock in profits. Okay, and so on and so forth. So that quickly turned into support level. Okay. Guys, I think I'm gonna call it a day. That's another extreme move to the downside. With very contrarian candles, huge down, quick up, down, down, up, down, down, up, up. So a lot of indecision at that territory over here. Okay. That led to some near-term corrections. Okay. So yeah, just use swing highs, swing lows, avoid these extreme moves, or wait until you have a clear view of what's going on. Okay. This is the art of price action. Candles can speak and can give us a lot of clues. Like Nicole said earlier, this is a equilibrium pattern. There is indecision, or you didn't spot the equilibrium. It was an indecision on the resistance level that now has turned into support. That could be interpreted as another pattern, actually. Up, doji, doji, down. Evening star formation. Or just simply the breakout decisively of our latest low, causing for a short position with target the previous resistance that now has turned into support. It is what it is. Yeah, so, or do I have another example? Okay, this is a summary. Where is the smart place to set my stop loss? Behind support and resistance level, or the stronger the better, more barriers in that area, not too wide, Olukemda. I believe that stop loss have been your biggest headache because you were placing it too tight. Okay, not too wide for you. I think it's too tight, if I'm not mistaken. From your comment, understand you were placing it way too tight. So it was kicking your stop loss and closing your position and then moving on your favor. So it was too tight. Where shall I place my target? In front of support and resistance levels. The weaker, the better, less barriers in that area. At regional places, based on your risk and reward ratio. Don't get greedy. Or measure, like I did earlier, measure the, you had your entry, you knew your entry, you had a clue about the potential stop loss by using the previous resistance area. So you knew your stop loss, you knew your entry, but you weren't really sure how to spot the target area. Just measure this distance and putting it twice, twice of this distance. It could be your second target. And if you want to lock some profits earlier, put the same distance as your first target. Yeah, it doesn't need, no, Nicole. Yeah, you're right. It's not necessary to be reversal, to be a reversal in order to take a decision enter the market, or a change of the trend, or a trace. You might consider trading the correction, the pullbacks, the limited corrections. The depends on your time frame as well, and or you can have both. You can place a long-term position, or and also on top of that trade some intraday corrections. Okay, so yeah, so that's pretty much it. Just to have more examples, and I want you to very careful, always observe your wicks, your tails. Tails are even more important than the body sometimes. Look at these repeated wicks at resistance. It was a clear indication that you can have some short-term short position. While here we had consecutive strong bullish candles with no tail over here. Can you see there was no tail, but it was a bullish tail? So that was an entry point for a long position. Be careful. Read what the wicks, the tails are telling you, not only the bodies. What else? Another example. Okay, that body, that candle, the fact that it closed at the tail, breaking the previous two ones, it was another short position. Was an entry for a short position. In this case, you could use either the resistance, so slightly above the resistance, remember, or if you consider that it's too tight, the previous one. Okay. Yeah, more and more examples. Double not bottom. Yeah, it's double. Sorry, not actually it isn't double top. Yes, double top. It's not a tweezer, but it's a double top because it was exactly at the same level. Old resistance flips and price now test a new support. So drag and drop your stop loss over here. There are many things that you can do. Just try to be careful on what you see and not what you think. So the next session, oh, so these are repeated, sorry. But the reason why I put these slides on is for newbies. But sometimes they don't know, or because they're not just learning. I don't know how many of you are newbies, guys. These slides are helpful for new people, new traders, to have to distinguish the difference between bean bar with no real body, bean bar with nose, bean bar, standard bean bar, and etc. So what this means, each of these means. So what that means, it means that bulls are in control. What this means, it means that bears are in control. But you can tell me, Andrea, why? What are you saying? We have a huge tail up. Yes, sellers fight. Sorry, bulls fight. What did I say? Sorry, I lost my words. Sellers are in control, not bulls. bulls fight, they push the price up here, but bears eventually, sellers took the control and managed to return the price down very close to the open price. So here, sellers are in control, not buyers, sellers. That's yeah. So it's very important to be able to read even the doji candles. So here, look at that. Inside bars, inside bar, breakout of the bars. So calling for a bullish momentum, which eventually close above the parent bar. So this is a bullish formation. Okay? Very important, very important. Here I have some more examples. What is a shooting star? What is a hammer? A shooting star, it can be seen at the top of an existing uptrend, and it's mainly formed, not mainly, it is formed by three candles, okay? And it's at the top of the pre-existing long uptrend. So the first candle should be strong bullish one, the middle one doji, and the third one it should be bearish with which sometimes is as big as the first candle. So this is a shooting star formation and indicates that there is a reversal signal of the pre-setting uptrend. A hammer um, again is contains by three candles, but the third candle is not necessarily need to be the same as the first candle. Sometimes it can be seen as way bigger than the first candle, or sometimes can be seen not as big as the first candle, but closing above the first candle. So this is hammer, a bullish formation. Bullish harami. Okay, this I cannot cover all this now. We have a candlesticks pattern webinar in our past webinar page. Feel free to have a look whenever you have free time. Okay, I'm gonna call it a date. Anything you need, I'm here to help. But yeah, we are just an hour and a half, an hour and a half here. Check the slides, and if you have any questions, just let me know. I'm gonna call it a day, guys. This webinar is recorded, so you're gonna receive a recording on your inboxes. Sometimes it goes to the spam folder, so have a look on the spam as well. Anything else you need, don't hesitate to contact me at webinars@hfm.com or contact our agents at the live chat in our website. Thank you very much. Have a great day ahead. Take care. A lot of volatility is expected. Right now, we have consumer confidence out from US, if I'm not mistaken. No, sorry. Actually, building permits were out. We have another 30 minutes for consumer. No. Wait. I'm confused a bit. Where's my calendar? It's a busy week as well. A lot of Fed speeches. Thank you for your nice words, Nicole. So we have an hour and a half for consumer confidence, but we have housing price index in half an hour, and we just had out the building permits were this morning. Is house pricing index in a half an hour. But the key will be the consumer confidence today, guys. This is the in focus because it will give us a clue. Sorry, about the confidence of the confidence of the consumers on the U.S. economy. Sorry, and whether we have the consumer confidence falling or stabilizing, and whether there is a fear and fear around the US economy, around a possible not a possible recession, but whether there is still fear in regards to any stagflation in the US economy and so on and so forth. So it's very, very important indicator to be closely monitored, because it will give us a clue and hints about the inflation in the US later on. How come consumer confidence showing no figures in calendar? No, no, it does actually. Ah, you're right. You're right. You're right. Okay, the expectations is for consumer confidence to come at 105.5. I don't know why the forex street it doesn't show it. Our calendar is linked with the FX streets. The expectation is at 105.5. So if it comes lower than expected, then that could add some further pressure today on a dollar, but that expected to be limited pressure. Okay, because the Fed speeches so far this week, they said, and they keep repeating that we might have more than one rate hikes by the end of the year, and that they might keep the rates high for longer, even with the new year, into the new year. So any pullback today, any disappointment, any mist of consumer confidence today might add some pressure on the dollar, but that pressure expected to be limited. So keep an eye on 105 40, 105.30 territory. Guys, I'm gonna call it a day. Thank you very much for watching. Take care. We have another busy agenda this week, and a lot of headlines and a lot of news, a lot of comments, adding volatility into the market, with the biggest beneficiary so far this week to be the dollar, and the biggest loser, the stocks. Okay, I'm gonna call it a day. Have a great day ahead. See you again tomorrow. Bye bye.